The stock that I would like to start with, or we're starting with, it's quite interesting. It's up about 30% in the year to date. That is just 2024. And if I look at for the last 12 months, it's up about 200%. Viewers, this is a stock that began its journey around the 1950s. And it was called Lakme at the time. So if you know your history, you know the stock that we're talking about. It is in fact Trent. But the story is quite interesting in the retail space, right? A few of these companies which have traditionally got really, really high valuations are being justified. And I know that you were talking about this on the trade setup as well. That is effectively the India story. But what's playing out here?
Yeah, so, it's interesting. I mean, there are arguments being made that, for example, if you can buy Trent or you can buy the rest of the retail sector,
right,
per se,
exactly.
in some sense. So look at this. The market cap of Trent at 1,38,000 crores on last count, circa 1,38,000 crores. The trailing 12-month revenues are about 11,260, which makes the price to sales of about 12.5 times. Look at the rest of the retail space and you get it circa the same valuations, 1,33,000. I've omitted D-Mart and Page out here, but sure, for obvious reasons, but that's how it's coming to, right? But Alex, it's just interesting because while one can argue that, oh, if you don't buy Trent, then you get 7 other retail companies and different phases of retail companies, etc. But look at what Trent has done in the last few years and then question whether it's worth paying the price for Trent or no.
So, but talk to me about those earnings then. How do you compare between Trent and maybe some of the other players?
So again, we a standard disclaimer, you can't compare each of these businesses because they are different per se, but just purely numbers. This is just data, okay? Right. You're not trying to draw too many inferences here, just data. Trent, from the COVID lows, 1-year lows, right? Today is 27th, right? So 27th of March 2020 is the start date. And 26th of March 2024 is the yesterday's date. Look at the price CAGR growth. Right. Trent has grown, the price has grown at a CAGR of 68%.
Which
That's
is
the
nuts.
way of, which is not, right? CAGR of 68%. This is the kind of reward that Trent is given. Compare that to a Shoppers Stop, which is 40%, which was high. But then the rest, D-Mart, 21, Aditya Birla Fashion, 6%, Relaxo, 8%, Bata, 3%. If you invested in Bata at COVID lows, you made a CAGR return of just 3%.
Which is...
Imagine being invested in Bata versus invested in Trent. So that's part one. But there's a reason for this, Alex. The reason is...
the earnings performance.
The earnings performance, the sales growth. I'm just looking at sales because earnings could be... bottom line could be deceptive as well. Aditya Birla Fashion has a loss per se. Yeah. But look at sales. Trent, sales growth is a CAGR of 34%. Now compare this to the others. 34% CAGR, by the way, is really strong. Compare that to the others. Campus is an exception to the rule with 23%.
But the base also is
very low.
Yeah.
D-Mart, 18%, Metro Brand 16%, and then the rest, Aditya Birla Fashion 11% CAGR, Vedant Fashion 10% CAGR, Relaxo has virtually had no growth in those 4 years, Bata 3%, Shoppers Stop 5%. So you can argue that some of these stocks have hardly had any growth, and because Trent has shown growth, Trent has gained. So
the argument, would it be, and you said at the start that you can't necessarily compare the earnings of all of these companies, but understandably, if you are in the branded retail space and you're trying to choose a company to bet on or rather to invest in, then you would necessarily want to look at the nature of the business as well. And it has been argued in the past that a Bata or a Relaxo, you're not going to go and buy 7 pairs of slippers and you're not going to replace them every 2 months. However, whenever the mood strikes you, you are going to walk into a store and say, hey, I need some new threads.
Yes.
So you buy new clothes.
Yes.
You buy more clothes than you buy slippers.
Yes.
So is that the argument?
That is the argument. But you can argue that from an investor's perspective, does she or he care whether he's buying what kind of retail? She or he wants growth from the retail sector.
Yes.
If the growth is coming from an apparel retailer, then so be it.
Yes.
I don't necessarily need to buy all forms of retail stocks, right? That's part one.
Yeah.
Now, what's working for Trent? And then at the end, we'll bring out the anomaly, which is D-Mart, compared to Trent and others, okay? But what is working for Trent is the key thing as well. So the PAT growth of the last 5 years, not just the 4 years, I'm counting pre-COVID as well, has been about 25.6% CAGR. We've spoken about the earnings growth being, or sales growth being northwards of 30%. That's part one. Emerging categories for Trent are now contributing to 20% of its growth.
And those are?
And I mean, you look at Star, you look at the various new forms of non-apparel business that Trent is coming out with as well. Those are doing
groceries
very well.
as well.
Yeah, grocery. Star is grocery, right? And I'll come to grocery as well. But the emerging categories are now 20%, and they have a lot of scope to grow, because you could argue that Trent is reaching a point of doing everything that it can on apparel, but there are other things as well that are coming out. Grocery segment, Star, is seeing a strong like-for-like growth on a very low base, but it's a very strong growth that Star is showing. 67 stores, and it's already growing at a breakneck pace. Maybe it could do more, right? Because we know grocery is the in thing.
So they're basically they're reducing concentration risk. Would you say that?
You could argue Zudio came out of nowhere, right, in terms of growth parameters.
Yeah.
And when I looked at the analyst notes, most analysts are modeling a 30 to 31% revenue EBITDA CAGR over FY24 to 26. So while it's grown at a 30%, 35% revenue growth for the last 4 years, it's not slowing down as per analyst estimates. So that's the beauty.
But and then what you were saying is that there's a bit of an anomaly here in the form of D-Mart. Why are you saying that?
But what I mean by anomaly is that it's just a fun argument, but the way people talk, why D-Mart comes to the picture is because of the move yesterday, right? So the way people talk about how if you buy Trent,
you can buy
seven retail companies. If you buy D-Mart, you can buy Trent plus those 7 retail companies from a market cap perspective. Because look at D-Mart's, market cap or what have you, right? So I have the data here, right? D-Mart is at 2,92,600 crores worth of market cap, a TTM PAT of 2,433 crores, and a PE of 120. But if you include Trent, Aditya Birla, Vedant, Shoppers, etc., I have a left out page here. But if you include all the others, their combined market cap is 2,71,000. So it is lower than D-Mart. But the TTM PAT, D-Mart's TTM PAT is 2,400 crores. These guys are at 1706. This is principally on account of the losses that Aditya Birla Fashion does, to be honest. But be that as it may, while D-Mart might look expensive to a lot of people, and that's why it's not done anything for the last 2 years, but you buy a D-Mart versus buy the rest of the retail sector, so to say, and D-Mart still doesn't look as expensive as the rest of the sector.
That's a very interesting argument to make. And look, ultimately it goes down, I guess, to buying a company. You don't only buy it based on the valuations, of course, but then it is an important factor to consider.
Yeah, but I must concede out here, Alex, that this is not a fundamental argument that I'm making. This is more showing the opportunity size, right? A lot of people do that Ramesh Dawani bought alcohol sector in 2004, wherein the alcohol sector as a whole was available at a fraction to what some of the other sectors were, or other companies were. In the same fashion, a lot of the other retailers are currently available at a fraction of what a D-Mart or a Trent are. So the question is, Trent has been rewarded for the right reasons. Maybe D-Mart gets rewarded for the right reasons going ahead. Would some of the other retailers play catch up?
Interesting question to ask, and perhaps that will be reflected in the numbers that come out in just a couple of weeks with the earnings season just around the corner. Let us know what you think about Lakme, which is now Trent, and in fact D-Mart. Would you go out and buy these two companies, or the rest of the space which you could buy at the same price? Let us know, and do stay tuned. Lots more coming up before the start of trade. This is NDTV Profit.